still the question remains, is the U.S. economy slowing or re-accelerating? This isn't an easy backdrop for business executives who have to make strategic and operational decisions in a very uncertain environment. What do these economic trends mean for them, and why do they matter? Let's break it all down for you right here on UBS Trending. Hi everyone, and welcome to UBS Trending. I'm your host, Michelle LaLiberty, filling in for Anthony. Jason and Paul are back in the studio to break down the latest trending report, the CEO Macro Briefing book. So without further ado, I'm going to jump right into it. There's plenty for us to talk about, from interest rates to geopolitics, but before we get into that, let's just start with the basics, and I'm going to start with you, Paul. Can you just tell us a little bit about the publication and what it entails?
Yeah, thanks, Michelle. So this is still a relatively new product from the CIO, and I think the major difference between this and other publications is that this is really geared towards executives and looking at the economy and markets from a business executive perspective. It's a quarterly report, and we structured it as in to go through the economy, to go through markets, talk about some risks. And while that's the overall structure, we hope that it's modular in a way that readers can take out things that they do like and use that, as well as look at the report as a whole.
Awesome, yeah, that sounds very useful. Okay, so I'm going to turn it now to Jason. So let's just get into some of the updates, the revisions. Can you point to some of the key points in the briefing book?
Well, starting from the macro kind of overall look, I'd say the difference this quarter versus last quarter is, if I distill it to a simple mantra, higher for longer. What we've seen is the U.S. economy growing stronger than expected, and it looks like it'll be that for much of this year. The inflation story, again, it's kind of a little bit hotter than people anticipated at the start of the year. As a consequence, our outlook for interest rates, both the Fed funds rate, but also like the 10-year, kind of revised higher. So we expect the Fed to cut rates twice this year, starting in September. A few months ago, we were thinking it'd start in May. So that's been sort of one change. So the big picture from the macro is still a solid, kind of scenario, soft landing, but we're kind of landing, or at least right now, we're at a more elevated level. And that's also kind of creates, its own risks and uncertainties in a way that is good, but, it's a little bit different environment than the Goldilocks we were experiencing earlier in the year.
Got it. And just for the benefit of our listeners, when you say soft landing, can you just elaborate a little bit on what you mean by that?
Very simply, soft landing to me means no recession for number one over the next year, but also an economy that kind of goes back gradually towards trend level growth of roughly 2%, and inflation continues to decline back towards 2%. And do so not just by the end of the year, but let's say within the next 12 to 18 months. No landing that people are sometimes using just means we stay elevated for a longer period of time. So think of a plane. Instead of landing, you're kind of you're cruising, circling, waiting to come to the airport.
Okay, got it. Higher for longer. That makes a lot of sense. Okay, so Paul, with that in mind, what does that mean for, again, I mentioned operational decisions that need to be made. What does that mean for people that are trying to make these operational decisions?
Sure. So we bucketed operational considerations into 4 large buckets: what the consumer is doing, what labor markets are doing, how our financing costs, as well as a look into the real estate market. And we take a look at these broad set of indicators and distill them into heat maps. And from the last quarter, everything has improved. So Jason was talking about higher for longer. That's partially because the consumer looks a bit healthier than it was before, especially with sentiment picking up. But also the labor market has remained very, very strong and has actually increased somewhat from last quarter. That said, we do see some healthy signs of normalization. On the demand side, both vacancies and wages are cooling, which is positive for the soft landing narrative that Jason was also talking about. The more challenging aspects of operational considerations, financing costs and real estate, while they have improved, they still remain a little below trend as higher interest rates really affect these sectors.
Got it. Thanks, Paul. And Jason, just on that note, we've talked a little bit about higher interest rates and the impact there on certain sectors. There's also been a little bit of optimism around a potential capital markets reopening, so things like IPOs, venture capital. Any thoughts on that and the outlook there?
So earlier in the year, our expectation was we'd start to see a pickup in corporate activity, more M&A, more IPOs, more kind of private equity transactions after almost 2 years of being kind of relatively constrained, largely due because interest rates moved significantly higher, and the thought was the Fed could keep raising rates. what we saw in the first quarter was an uptick in M&A activity, like first quarter this year versus last year. We're seeing the IPO window open. There are some high-profile companies that have gone public. I think that's sort of translated into a little bit more activity in the private markets, whether it's private equity or venture capital. We've also seen a broadening out of equity market performance. Last year, the story was the Magnificent Seven. This year, you've actually seen 3 of those stocks go down year to date. So some people say like the Fantastic Four. But overall, the markets have broadened. So that's a good story. But most recently, the rise in interest rates just since kind of the beginning of April throws a little sand into the gears, because now you have the question is like, how long could rates stay higher? Could they go even higher? It does kind of make it a little more difficult to think about maybe M&A activity for IPOs. If you want to go public, there's some uncertainty there. So we don't think it changes the story, but it maybe slows it down in terms of the pace that we could have thought for corporate activity to pick up as the year goes on.
Got it. And I think that's a good segue. Just on the point of uncertainty, I think we've got time for one more. So I want to shift gears for just a minute here, and Paul, go to you for the last question. There's obviously a lot going on in the world, from Russia, Ukraine to the Middle East. So how does the impact of geopolitics here make a difference on these types of decisions, and how can they be thought about by executives?
Certainly. I think these types of geopolitical risks are actually very hard to measure, but it does seem that things have become more tense. I think for executives, the good thing is that these rising tensions haven't adversely affected the supply chain or markets in the same way we saw back in the beginning of the Ukraine invasion. Oil markets are quite well behaved so far. Supply chains seem to be normalized. The only expression of some risk has been the higher rising price of gold, which we're watching. In terms of domestic politics, it seems now versus the last time we published a report that it's much more clear about who is running for president. And we still think that even though the presidential race might be split right now, it's really hard to tell. More important for executives and for investors is what's the likelihood we're going to get a unified government, because that's really the key to passing key legislative initiatives. And we think that the odds of that happening are still quite low right now.
Right. Well, I'm sure we'll have plenty to talk about come November. But thank you both for being on the show. And with that, I think we can wrap up. So for more information, visit www.ubs.com/views, and make sure to follow UBS on social media, LinkedIn, Facebook, Instagram, X, and check out our Instagram channel @UBS Trending for UBS Studios content that you can't find anywhere else. As always, if you have any questions about your portfolio, please speak with a financial advisor. Until next time, I'm Michelle LaLiberty. Have a great rest of your day, and remember to keep your eyes on what's trending.